So let's talk about December 17th, 2025. If you happened to glance at the markets that day, you saw, well, you saw a bloodbath. Just a sea of red. It was a really brutal day. But this wasn't just some random dip. It was a signal. The real question is, what was it trying to tell us? Yeah, this was a perfect storm. It wasn't just one thing. It was this crazy collision of confusing economic signals and some pretty stunning political moves that, frankly, shook investors right to their core. So today, we're going to dissect this one chaotic day, piece by piece, to really understand the powerful forces pulling the strings.
We're going to start with the big one, the S&P 500. You can think of this as the report card for the entire U.S. market, right? It tracks 500 of the biggest companies, and on this day, it fell a heavy 1.5%. Now that is a significant move, and it tells you the selling was happening pretty much everywhere.
And it wasn't just the broad market. Even the big guys, the Dow Jones Industrial Average, that club of 30 massive blue-chip companies we all know, they dropped over a full percent. When these giants fall, the worries run deep, and they're touching every single corner of the economy. But man, the biggest hit of all, that was right here, in the NASDAQ. This is where all the tech darlings and high-growth stocks live. A drop of over 2%? Ouch. That shows you that the engine room of the market, the place investors were betting on for the future, was suddenly looking incredibly shaky.
Okay, so how do we make sense of all this? Here's the game plan. We'll kick things off with the confusing economic data that kind of laid the foundation of fear. Then, we'll look at two political bombshells that just rocked the market. After that, we'll check in with the central banks trying to navigate the whole mess, before we zoom right into the individual companies that either bucked the trend or got totally crushed by it. And finally, we'll ask the big question: what does all this mean for the year ahead?
All right, first up, the economy. The data that we got today, it was enough to give any investor a serious case of whiplash. It was a day of total contradiction, where every little bit of good news seemed to have this deep, dark root of bad news attached right to it.
I mean, just take a look at the jobs report. On one hand, hey, November added more jobs than anyone expected. That's great, right? Well, hold on, because then you see that the previous month's numbers were revised down to a massive loss, and the unemployment rate jumped to a 4-year high. So is the economy strong, or is it weak? The data basically just stared you in the face and said, yes. And the hits just kept on coming. Retail sales looked totally dead in the water, but a key part of that number, the one they use for calculating economic growth, was surprisingly strong. Manufacturing, clearly slowing down. And then, casting this long shadow over everything, is tomorrow's inflation report, which everyone is terrified is going to show prices are heating up again. This isn't just noise. This is a foundation of pure uncertainty.
Now, into that environment of complete economic confusion, someone decided to throw a lit match. Two major political stories broke, one from abroad, one from right here at home, and they poured gasoline on an already very, very nervous market. The first shockwave came from the Caribbean. This is where the White House dramatically escalated its stance toward Venezuela, which is a key, if, let's say, controversial, player in the global oil market.
And listen, this wasn't some nuanced policy shift buried deep in a press release. No, this was a direct, all-caps order blasted out on social media for the entire world to see. For markets that hate nothing more than uncertainty, this was a 5-alarm fire.
And immediately, just 1,000 questions erupted. What does a total and complete blockade even mean in the real world? Is that even legal? And what happens to the price of oil if this thing actually goes into effect? So here's the crucial point. The early consensus from international law experts was chilling. They were saying this wasn't just a tough stance. It was a serious breach of international law. It could even qualify as an act of aggression. The bottom line here is that massive, unpredictable risk just got injected directly into the global energy supply chain. And as if a potential international crisis wasn't enough for one day, another fire started, this time in Washington, aimed squarely at the internal workings of every major corporation in America. To really get this, we need to quickly talk about ESG. It stands for environmental, social, and governance. It's basically a framework investors use to judge companies on things like their carbon footprint or their diversity policies. It's become hugely influential and, as you can probably imagine, incredibly controversial. So this executive order takes direct aim at the advisory firms who guide trillions of dollars of investment based on these ESG ideas.
by accusing them of pushing a political agenda and ordering a huge, full-scale federal investigation. The White House just threw the entire rulebook for corporate governance into question. This creates massive regulatory uncertainty for every single public company out there.
So let's zoom out for a second. The economy is confusing, politics are volatile. So what are the world's most powerful financial authorities, the central banks, doing to try and steer the ship through this storm? The answer is they're trapped. They really are.
Let's just use the Bank of England as an example of the global picture. You can see the trend for 2025 has been pretty clear. Cut, cut, cut. They're trying to give a jolt to a slowing economy. They paused back in September, and now another big decision is looming. And this isn't just a British story. It really reflects the pressure on central banks everywhere to step in and provide support. But here's the problem. They need to cut rates to fight off a recession. But that rising inflation we mentioned earlier is telling them they need to raise rates. And the political shocks are just making it all worse. It's like trying to hit the brakes and the accelerator at the exact same time. They are walking a razor's edge with absolutely no room for error.
Okay, so we've seen the chaos from 30,000 feet, but how did all these massive forces actually play out on the ground for individual companies? Let's zoom all the way in and take a look.
You know, this one chart really says it all. The average stock got hammered, but it wasn't a uniform decline, not at all. You had these huge outliers. A company called Jabil somehow managed to soar 8%, while a tech giant like Oracle plunged more than 5%. This wasn't a market, it was a battlefield.
And when you dig in, you see it was all about the story. Jabil, they crushed their earnings report. Boom, the stock is up. Oracle, they had a major funding deal stall. Wham, the stock is down. Lennar gave a bleak outlook for housing, and Nvidia just got swept up in the broader tech panic. The crucial point is that in this kind of chaotic environment, a company's individual story mattered more than ever before.
So, let's zoom back out one last time. We've gone through the messy data, the political shocks, the corporate carnage. What is the one big takeaway from this day of chaos as we start looking toward 2026?
The single word that defined December 17th was instability. The economic foundation is shaky. Geopolitical risks are boiling over, and domestic politics are creating brand new fault lines. It all leaves us with one critical question for the year ahead. In a world that's being pulled in so many different directions all at once, which force will ultimately win?